All right, what's up, everyone? Welcome to the 5ers Live Trading Room. It's Monday. It's what day is it? It's the 22nd of July, Monday, and it's time to do some live trading. How you doing, Victor?
Hello, everyone. I'm excited. Are you excited as well? This is a new start of the week. We have new opportunities. We have the things changing on the political arena. So a lot of exciting things coming up. Today, we don't have any high impact news, but certainly we have a lot of probably going to have a lot of uncertainty, and with uncertainty, volatility, and volatility is what brings opportunity for us as traders. So I'm doing great. How about you, Jonathan?
Doing great. Speaking of politics, I was working on a video and the video was about the difference between Biden and Trump. If either of them were going to get selected, how could that potentially impact the financial markets? And now, obviously, as you guys know, Biden is dropping out of the race, which means that I will be dropping out of the video. So I was recording the final part of the video and I'm like, well, okay, I gotta make a new one. That's a bit frustrated, but it is what it is. Never a dull day in the world of macroeconomics and the world of politics. However, this is not a political stream today. This is strictly a strictly money-making stream where we don't really care about who's in charge all week. Well, on a personal note, of course, but what we care about is where's the market going? Are we going up, down, or sideways? But yeah, we did have a lot of things going on over the weekend here, and I was in a long position on AUD JPY, and as you guys know, AUD JPY is one of those currency pairs that perform well in a risk-on environment. So when the S&P 500 is bullish, when the market is feeling positive, then the AUD JPY usually follows that trend to the upside. And then we did have some happenings over the weekend that might signal some uncertainty, which then caused the AUD JPY pair to move lower. At least that's what I'm thinking, and stop being out on that one. Did you're not yeah, we had CrowdStrike outage as well over the weekend, so we had a lot of things happening around the world. But you're not holding any trades over the weekend, are you, Victor?
I am. Yes, I sometimes do, and it's a case by case thing. So normally my trades are meant to be closed at the end of the day, but sometimes the signal comes right at the end of the day, and I know that I need that influx of volatility, of volume, to have that impulsive move that I'm trying to catch. So in that way, in those scenarios, I already know that it has to be an overnight, because the market is not going to move 40 pips, in the last three, half an hour of the session. So I do have overnights, and if I have higher time frame signals, then for sure I would be looking to keeping them open for a couple of days. And if a weekend is in between, I will just have to check that that the price when at the end of the session on Friday is not too close to my stop loss, because there is that risk, that weekend gap risk, that you have to be mindful of, because a lot of things can happen in those 2 days that the market is closed. And if you are, only 10 pips away or maybe 5 pips away of your stop loss, and it opens 30 pips, it can make your loss will be multiples of what you intended it to be. So that's the only thing I keep in mind. But I had enough difference in pip, at least in consideration with the rest of my risk, so I left them open. Believe it or not, I'm long EU. On EU has closed a bearish daily candle, or not daily candle, but daily order block, which I am looking for price to go short when it goes a little bit higher. But I already had on Friday, Thursday, I had some structures building up. So I think we might. It's not about what I think. I got some signals to go long and into those bearish structures, where I'm going to be, of course, closing it and hoping for a reversal back to the bearish side, because indeed, we have now started to see the first indication of some deceleration, right? We last couple of days, like I don't know, 10 days or so, we've only been forming bullish structures, and it's been very bullish on many relevant time frames. And that first daily bearish order block is, to me, a possible beginning of market maybe consolidating, maybe retreating a little bit.
Yeah. No, it's a good point right there. So first of all, with the holding trades over the weekend, I did, I did consider closing the trade, and obviously now in hindsight, it would have been the best idea to actually close that ADJPY trade. But then again, I've never really had any bigger problems with holding trades over the weekend, and usually my most profitable day of the week is Friday. So I've seen that the trades that I actually do open on Friday and hold over the weekend, they have a higher win rate than the rest of the days of the week. And I don't get a lot of signals on a Friday, but when I do get signals, they usually have higher win rates. So but the thing is, I've never had to deal with a gap down in my 7 years of trading. And I do think, if I would have, because I mean, my stop loss was, I mean, not now we're talking about ADJPYs is a bit different with the pips and everything, but looking at the stop loss here, that would be like 90, 90 or something like that on ADJPY. I'm not sure. I mean, not very wide, not like super wide. So there could easily have been like a massive gap down. But for that to happen, a gap down like that to happen on ADJPY, I kind of feel that we probably would have had not a black swan event, but something along those lines, which is possible. And if it happens, then you could perhaps even blow your account. So you got to be very careful. Got to be very careful. But again, I haven't really had any struggles with that yet.
You
But
said
today's
19, right?
no
19 the
90,
pips.
90,
90 is
9.
90. That is
Yeah,
plenty of stop loss. I mean, the gap risk has to be seen, of course, in relation to the distance you are from your stop loss. And if you say you're 90 pips away or something in that direction, that's not very likely that the weekend gap will be more than 90. And even if it is more, it's not going to be 6 times that, right? But if
exactly.
you're
Yeah, you're absolutely right about that. I mean, it's not going to be a 600 or 700 gap to the
exactly,
downside. That's not going to happen. It might be like a 50. A big gap would definitely be like 50 pips would be a massive gap, even that. So I think it
yeah.
wouldn't be.
So
But
I think for you it's less of an issue. I think if you
yeah,
are, let's say you are 10 pips away, then 50 pips gap is 5 times potentially your stop loss, and that can make you lose the account, for example.
yeah,
If
exactly.
you lose like in a black swan event, you lose uh, maybe double the size the stop loss you intended for. That's still in like worst case scenario, it's not that catastrophic, right? But then again, I have to say that my risk on even if it goes 5 times, my risk per trade is very smaller. So that's one way I mitigate those risks as well.
Okay, guys. So now I want to. I'm gonna go. So the idea with this live stream here now, I just wanted to take a couple of minutes to make sure that people are coming into the live stream, because what I'm gonna do now is we're 10 minutes into the live stream, and I want to talk about my trading system, and I want to try to break it down step by step, exactly as the live stream title suggests. So I want you guys to make sure that every question that you have, write them in the comment section. We'll try to cover as many questions as we have time for, and also Victor is going to be here with me, and he's going to ask me questions as well, things that he maybe think that I could be describing better, or that he thinks that maybe your viewers are because I might explain my system in one way, and then some people might want me to explain it in different different terms. Okay, so let's see. And on this right here, I'm not going to be showing. So I have a challenge that I'm doing, a 100K bootcamp challenge, and I'm probably going to go through that on Wednesday, show you what trades I'm taking and how I'm trading them. I think it's better to wait with that, because today I'm going to show you what trades I'm actually taking on that system, because it's this system that I'm going to be talking about. So let's first give you guys a quick introduction to the overall system here. So this is not a complicated trading system at all. Okay, it's actually very, very simple. And what it's based on is horizontal support and resistance level. Yeah, sorry, I just had a message I had to go through. Sorry about that. Alex sent me a message on WhatsApp, a funny message that I had to. He knows I'm live. He's just doing this to mess with me. Okay, so introduction to the system here. So what I'm doing is I'm trading basically support and resistance levels. Okay, so you guys have heard me talk about the break and retest, right? But this I'm not going to I'm not gonna break down the break and retest system here, because the way I'm trading is, it doesn't necessarily have to be a break and retest for me to enter a trade. It's not that every trade I take has to be a break and retest. But the way I'm looking at horizontal levels and the way I'm trading horizontal levels, every trade is usually a break and retest. There's a high probability that the trade I'm taking is a break and retest, because when you're trading the way I'm trading and you're looking at trending markets, the best retest of, for example, a support area in a trend is going to be after a break, and then you go long on the retest, and most likely the first retest. So we're not going to be focusing too much on the break and retest concept, but I will mention it, and I'm sure that most of you understand what the break and retest system or the break and retest concept is by now, because we've talked about it for about 6 months now on this live stream. So while I go through this, let me share my screen, and I'll be making some beautiful drawings here on TradingView. So the first thing that I do, and the most important thing with this type of trading, is horizontal levels. Okay, so all I really care about is horizontal support and resistance. I'm not adding any trend lines. I'm not adding anything other than horizontal levels. And the idea is very simple. When price hits a level of resistance, a horizontal level that I've marked out as resistance, when price comes up and tests this level, I know that the probability of price using this level as resistance is higher than breaking through to the upside. It's just clear, simple logic when it comes to technical analysis. Resistance is resistance, and it's going to act as resistance until proven otherwise. Same thing with support. Support is going to act as support until proven otherwise. And what proven otherwise means is, you have a breakout to the upside, you break through resistance, you have a break to the downside, you break below support. Everyone understands this. This is simple. And that's what my trading is all about. I start with the daily and the weekly time frame. Now, I'm going to be talking about my high time frame levels. And when I say high time frame level, I talk about the weekly and the daily. And my main trading time frame is the 4-hour. So my analysis is done on the weekly and the daily, with a specific focus on the daily, and my trading is usually done on the 4-hour. When I'm trading, when I'm in the zone, when I'm trading my best, those are the only 3 time frames I'm looking at. I'm not looking at the 1 hour. I'm not looking at the 15-minute or lower. I'm looking at the daily and weekly when marking out my levels, and then the 4-hour when actual trading happens and when I'm executing the trade and putting in the stop loss and the levels. That's where I do most of my best trading. Now, the way I'm trading is I'm swing trading, but you don't have to be trading this from a swing trading perspective. Instead of using the higher time frame level as a daily and the weekly, you can use, let's say, the daily and the 4-hour, or the 4-hour and the 1 hour, and then you go a couple of steps lower as your main trading time frame. So let's say you're day trading, you might be looking at the daily and the 4-hour for your high time frame level, and you're executing all your trades on, let's say, the 15-minute. And so, or you can be looking at the 4-hour and the 1 hour and executing on the 15-minute or the 5-minute. So it's all about being consistent. Okay. I've chosen to be looking at the higher time frames as a daily and weekly and doing my execution on the 4-hour because that fits much better with my personality and my life situation. But you have to figure this out by yourself. I'm not going to be able to tell you that this system will work for you, but I will be able to tell you that this is how technical analysis work. This is how price is reacting to certain resistance and support levels. And this is the way I'm trading it. And price action is fractal. So you can be trading it from a swing trading perspective or a day trading perspective or even a scalping perspective. You will see that if you remember when Saul, the CEO of The5ers, when he was on the live stream and he talked about his trading system, it's just the same. He looks for support and resistance. He buys that support, he sells that resistance. I'm doing the same, but I'm not on the 1 minute. I'm on the daily and weekly and the 4-hour. So it's very important to understand that. You might ask me, what is the win rate of this system? Well, it doesn't really matter what my win rate is. I can tell you, however, that the way I'm trading with a low risk to reward per trade, I'm going to get over 70% win rate in back testing. And this means that the back testing gives me over 70% win rate. But live trading is not back testing, because in live trading, you're adding a lot of mental, trading psychology basically is a whole, different world. So it's very important that you understand that, your result with trading a system like this will not be the same as mine. It would not be the same as Victor is trading this system. What it all comes down to is how are you affected by the wins and losses and how you can deal with the drawdown and that sort of thing, because we're not going to be trading completely automatic. So with that said, I would say I'm putting about 25% of my about 25% of my trading on technical analysis and 75% on trading psychology. So the first thing I'm doing is I'm adding horizontal levels on the daily and weekly time frame. So we can look at, for example, AUD JPY. Now, this was a trade that I took over the weekend, but I got stopped out on this one. But it's not really, the important part is not if I'm getting stopped out or if TP is hitting. The important part is where's my edge, and the edge lies in the entry trigger, okay? When you have an entry trigger and it's time to enter the trade, from that point on, you're not supposed to worry about if stop loss or TP is getting hit. All you have to worry about is execute when you find the edge. The rest will take care of itself. It doesn't matter if stop loss or TP is getting hit on that trade. What matters is what's your result over the course of 100 or 200 trades. So all you have to focus on is, do you have an entry trigger? Yes or no? If yes, enter the trade and try to not care too much about what's happening after that point, because I'm not doing a lot of trade management. But let's remove this trade here. So whenever I have a trade, on a specific symbol or pair. I move it to a list called trades, and I haven't taken a trade on ADJPY probably all of this year, so I don't have a folder for that one. But I'm adding it to that folder called trades, and then I press the I to remove all the drawings, which means that now I have a fresh chart. And when I go back, and when I'm doing my weekly trade journal review, I'm just going to click that I right there, and all my trades come up, and I can do some review on that one. So this is ADJPY right here, and every weekend I spend about 1 to 2 hours every weekend doing planning and market analysis. Okay, so I'm marking out every level that I think makes sense on the daily time frame, and then I try to find levels that also are in alignment with the daily and the weekly. And the best way to do this, and the easiest way to do this, is just move to the line chart. Okay, just move to the line chart and then add the levels based on the line chart. Because what the line chart does, it removes all the wicks, and you only have the opening of each candle. I believe it's the open. Maybe it's the open, not the close. So you only have every high and low here is just it's the opening on each candle. And I'm looking at this, and I'm just going to be adding one here. Okay, that's my level on the daily. Perfect. That's it. Nothing. And I'm not spending a lot of time on that. Going to the daily, I kind of like that. I'm looking at this, and I'm thinking there's definitely this section here, the upper part of that level, is definitely the more important part. Go to the line chart, I go to the weekly chart. Does it make sense on the weekly as well? Yeah, it definitely makes sense on the weekly as well. We have one peak here and then another peak here on the daily, and that encapsulates the upper part of that level perfectly. And now that I've done that, I quite like that zone better because it's the daily and the weekly. It's the perfect level. And now what I want to do is, so this is on the weekend, right? And what I'm doing now is I'm just adding an alert. So in TradingView, we have this wonderful function that gives you alert directly to your mobile, or in my case, I have a smartwatch. I'm getting all the alerts to my phone, to my watch, right? So I get an alert, and then I check my watch, and it says AUDJPY, look for entries. So if I have an alert that I like, I never bring up my phone because I never trade my phone. But if I have an alert that is important, that's when I pull up my laptop. If I'm not at home, if I'm at home, I go down to the office because I know it's time to execute. So I do my planning on the weekend. And if I'm not getting an alert that I like, I'm not looking at TradingView. Okay. I don't have TradingView open on my PC, or I don't have MetaTrader up or anything unless I have an alert. If I don't get an alert, there's no trading to be done. This makes it impossible for me to take a trade that is not in my plan. And when I say plan, it's my trading plan, and that's done over the weekend. Okay. This way, you make sure that you only trade the plan, and you're also usually in the right state of mind over the weekend because the market is closed. Prices are not moving. They can't affect your impulsive decision making. If you scan in the market on Monday morning, there's a lot of things happening, and you're influenced by the market's moving. But on the weekend, you can be completely unbiased and have a clean perspective, and that's the perfect time to make your trading plan. So let's assume that we have an alert right here. Okay, this is on, I don't know what time that is, 11th. So this is on a Thursday. Well, let's say Friday, Saturday. So now it's Saturday, that's Sunday. I'm making the plans here on Sunday, and then next week, price go down. It comes down, it hits that level. So we marked out a good horizontal level. We have an alert. Let's say we have an alert right here, okay? So what happens when I get an alert? So first you have the adding of horizontal levels, and that happens in the planning stage. And then the alert gets triggered, and I see on my watch, and then you don't have to have a watch, you can have it on your phone or whatever. And then it says something like, look at the charts, or time to enter, time to plan your entry. So I know that, and that is the time when I go into the 4-hour time frame. Okay, so this is now the 4-hour time frame. We've hit that alert. We have price approaching the level. I'm adding another alert right here. So we have another alert here because Price might bounce here, but I'm not interested in that bounce. I want price to come down lower. Again, remember, we're looking for the perfect reactions. We're looking for the reaction at the perfect level. We're not looking at a trade that's like, oh, you know what, this is not really perfect, but I'm going to take the trade anyway. We're looking for the perfect trade, only the perfect trade, which means you're probably going to get like maybe one trade a day or one trade every other day or something like that, but they're going to be good. They're going to be good. And it's better to take few good trades than many mediocre trades. Okay. So price comes lower, boom. That's the alert right there. There we have the alert. Now, what's the confirmation? Now we're looking for confirmation because we now know trade is in the area of interest. And when you have a trade inside the area of interest, also remember, or you can see here that this is a break and retest. Remember, I said that I'm not going to talk a lot about the break and retest because most of the trades that are good of high quality is a break and retest, and it's going to be first retest. You get the break, and that's the retest. But that's not the only trades I'm taking. The most important trades I'm taking is hit a high time frame support. I'm looking for longs, unless it looks like this. Like I'm not interested in the fourth retest, maybe the second. But again, we're looking for the perfect trade, so that's going to be the first one. We're now in the area of interest. When price is in the area of interest, that's when you're going to focus. You're going to be looking at the screen, you're going to be looking at the charts, and now you're going to be focused because now you're looking for confirmation of a trade entry. And what does a trade entry confirmation look like? You have two alternatives, and both of them can be equally as important. The first one is two types of candlestick formations. That is the engulfing candle and the pin bar. In this case, a bullish engulfing and a bullish pin bar. If the next candle on the 4 hour is going to close here, then that is an enter trigger. And I will enter on the close of that candle with stop loss either below the level. And if the level is very wide, and it just makes no sense. I mean, imagine if the level was all the way down here and I would have to put my stop loss here, then that makes no sense from a technical point of view. Then I would use the low of the trigger candle, the low of the formation that caused me to have a confirmation of entry. And also a pin bar. You can also see, price might not have to close above this candle, but imagine if there's like a big wick, a big bullish candle with a big wick telling us that there's a lot of buying pressure in this area. Then in that case, I might want to get in on the trade. And if you can, from a risk to reward perspective, have a wide stop loss, then this is going to be one of the best levels to have your stop loss, because that is the low of the move that broke the level. Okay, so that's the breakup move, and it came from that low right there. So entering here, stop loss here, and then TP maybe around this area would be a decent trade as well. But again, if it makes sense from a technical point of view and risk to reward point of view as well. Question: do you take engulfing as a candle that closes above the wick of the previous? That's a good question. It depends on the situation. It depends on what I mean. What I'm doing here is it's a very discretionary way of trading. So I would say that it depends on the market structure. In this case, in this particular case right here, I would want it to close above that wick right there. Okay, that would tell me that there's a lot of buying pressure, because it would then close bullishly above this candle, but also that doji candle right there. So if the next candle would close above that wick right there, that would tell me that there's a lot of strength here. If the candle will close just slightly above that wick, then I might be looking at that doji candle as a sort of resistance, like the candle can't get above. But these are things that make sense to me. I mean, it makes perfect sense to me. It might not make a lot of sense to you, but these are things that you will learn through your trading journey, and you'll adjust the system from a discretionary point of view, depending on how you're watching price action, because we're all looking at the same type of price action, but through different lenses. So what I'm telling you here when it comes to confirmation of an entry might not make a lot of sense to you. But what I do know is that we can all agree that support is support and resistance is resistance. So let's keep it at that. We buy at support, we sell at resistance. It's very, very simple. Yes. Yes and no. I mean, it can be too big. I mean, what if the candle closes up here? You know, am I going to enter here? Of course not. I'm then going to wait for a retrace down here and another bullish engulfing candle here. And now we have this structure, a double bottom with a higher right leg. You know, so we can have too big of a candle. If the candle is too big, if the candle is closing close to where we would have your TP, then obviously that would make no sense. So the bigger is not always better. You know, we want to make sure that it's, you know, makes sense from a technical point of view. But I get what you're saying, and I would say you're probably right from your perspective. But I want to make sure that people don't think that, you know, you see the biggest bullish candles and you're going to buy it. Yes, exactly. If it's too big, then the move has already happened. Exactly, perfect. So let's look at this. Let's try to, you know, break this down. Are we going to get any confirmation here? What's the next candle doing? Well, look at that. That's a big bullish candle on the 4-hour. Now that's, I would argue that this might be too big. This might actually be too big. This is a big move right here. I think we're going to get a retrace. In this scenario right here, what I would do is, so we can look at the potentials here. Entering at market right here. Just entering right here at market. If we would have our stops down here, what would have to be our TP? I would, you know, when it comes to, again, stop loss, I've covered that. You know, we're going to be putting stop loss below the level or below the candle structure that formed entry trigger. Can we have stop loss down here? Does that make sense from a technical point of view? Yes, it does. But you know, I think the move has already happened. The bounce has already happened. If we come all the way down here, then I would not want to be in this trade anyway. So we can kind of limit the risk of this trade and also the potential by moving the stop loss perhaps up here and then lowering our risk, our TP as well. And when it comes to take profit target, I'm looking at the very first trouble area, like the level or the area where I think price will most definitely have a reaction. The very first area on the chart where I think price is going to have a reaction, which I think might be around this level right here, because I do see that there's some type of price structure right here. A lot of people will probably look at that level, like that's the breakdown level, and I think that's a great target. But we have a trouble area before that one, and that is this area here, or maybe even this level right here. Now, the risk to reward is a bit too low, 0.44. I could take it if it's like a perfect trade, but it's not the perfect trade because we're entering a little bit too high. But we could have the TP in that area for a 0.56 odd trade. Now, I do think that in these cases where we have a big engulfing candle like this, you usually retrace down to like a low time frame level, which would be that level right there. And now we have actually a decent risk to reward here. So that would probably be how I would be trading this trade. But look at this. We have now, from looking at price trading up here on Sunday, we marked out that level on daily and weekly, put alerts here, price comes down into the area of interest, we look for confirmation happens, and we enter. Now, we know that this is a trade that's going to be stopped out. We're going to be looking at more examples. And I'm also going to show you different ways of confirmation. But let's see how this would be playing out. Okay, so we would have been in the trade right here with that move right there, taking, you know, coming down, taking out these low time frame levels. And this is something that's going to happen very, very often. And now we have a 4-hour bullish pin bar candle closing as well. And then we see price move like this. And this is actually where I got stopped out because I did enter, I believe I entered based on perhaps that candle with a stop loss like this. I believe that was my trade. But we're back inside the area of interest, and there's still a trade to be made here. So we can go to the daily. Now, the daily is not looking great, but if we can use this level as support, because we're still using this level as support. And imagine if we're getting something like this. So the first option of confirmation is the candle structure, the engulfing candle or the pin bar. But we also have a possible break of structure after testing the level. So first you test the level and then you have a break of structure. So When going long, you want to see a bullish break of structure, because obviously you have a downtrend, a low time frame downtrend into the level. So when you're hitting the level, you want to see a break of structure. So that might look something like this. Okay, if we see this, then that would tell me that we've used this level as support and we're ready to go higher. We don't even have to have a higher high. We could just have something like this with a higher low. That would be a trade to me as well, signaling that we have a higher low right here. So I might want to enter on that one right there with stops below the structure, and then TP at that area. Now, this would be almost a 2R trade, great risk to reward, but we're now seeing that we're testing this as support, and it looks like, it's holding as support. And then when you have this structure on the 4-hour, you might also have a daily candle, a daily bullish engulfing inside this W structure. And I think Henry is right here. It says inverse head and shoulders. And the thing with a head and shoulders pattern is it's actually a very effective and profitable formation, a pattern, because it's almost a picture perfect structure break, where you have, a high, a higher low, higher high, higher low, and then you have a break to the downside like this. So you get equal low. So instead of continuing to the upside, this is the uptrend, right? But instead of that, you're creating equal lows and a new higher low, and then you break to the downside for higher highs and higher lows, and then you're going to retest the neckline of the head and shoulders, and it comes lower. This is the type of break of structure that I'm talking about. You want to be entering right there. And if I flip this and create an inverse head and shoulders, that's what we're looking at. This is the one of the picture perfect break of structure that we're looking at when going long and when going short. But it doesn't have to look like a head and shoulders. It can just look. It can look however, it can look like this. You have something that just looks like this, but still this is sort of like the same thing, because you have higher highs and higher lows, then you're creating lower lows and lower highs, and then you start breaking down, and you can look at this as the neckline of that structure, and then you come up and you retest that level right there. That would still be a trade to me with entry here and then stop loss above here, and TP wherever it makes sense based on FTA area. And we also have viewers saying in ICT that area is a breaker block. And guys, I would argue that you would have a much better time. Maybe not a better time. It's going to be a much more boring time in the world of technical analysis. But you're going to have an easy time if you try to take, this is my personal opinion now. I know a lot of people won't agree with me, but you take all of these fancy words of different patterns and different trading system, you take them all and then you kind of put them in the box for a while. Just put them there, don't look at them, don't mention them, and then try to instead think about market structure. Just simple market structure. Higher highs, higher lows, lower lows, and lower highs. And just look at break of market structure without putting any labels or names or anything. Just simply unbiased technical analysis with market structure, and try not to think in terms of this and that type of system. Again, it's also one of the reasons why I'm not talking about the break and retest concept here. I'm just talking about horizontal level and market structure. So we could have something like that. Now let's see what another trade. Let's see what other trade did I take last week.
Maybe I can ask a few questions for clarification for those who might be wondering. So let's say, okay, so if we break down how your flow is, you start with the weekly and the daily. You identify the horizontal levels, which are areas, which are support and resistance, and you look to trade them, to sell the support, sell resistance and buy support. Very simple put, right?
Yeah.
And when it breaks, you do the opposite. So if it breaks, you assume that it flipped. The resistance is now probably a support, and you'll be buying that broken resistance that turned into a support.
Yes. And one thing that I mentioned there is trade with the trend. Okay. I'm a lot of people, they, when I'm looking for longs in an uptrend. So I mark out support in an uptrend, and then I look for that area to get tested as support, and I look to long. But a lot of people ask me, but if you think price is going down to to support, why don't you short it? And the reason why I don't short it is because I don't short an uptrend. So looking at AUD JPY here, see if we can zoom out. We got the monthly right here, and let's just add this right here. We're going to be writing monthly resistance. So if I'm going to go long here, if I'm going to go long here and I'm expecting price, well, not expecting, it's the wrong word, but I think that there's a likelihood that this level will get retested. Why am I not shorting this level? Because that's monthly resistance. And that's a good question. I mean, that's a fair question. And the answer to that is because in an uptrend, there is no there's no absolutes in trading or technical analysis. Yes, we are most likely going to see a rejection up here. We're going to see a reaction at the monthly resistance. But I don't know if we're going to be bouncing here, 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 or here. I don't know where the bounce is going to be. I know, however, if price comes down to support, there is a high likelihood of seeing a bounce. And I know that there's going to be some sort of reaction, and we have this whole uptrend right here. This whole uptrend right here is helping price, kind of like pushing it to the upside, because we already have the trend. People are expecting this level to act as a support level. So I only trade with the high time frame trend unless we're in a obvious range. Then I can be trading that range. If you're in the daily range and you're testing resistance, then it makes sense for me to short that resistance. Let's see another trade I took. We can look at that. Okay, so this is another example as well of a trade plan I've done over the weekend. Okay, so as you can see here, yesterday, Sunday, this is the plan. Okay, so you can go to the line chart here. You can also see on the weekly. That's the low of that daily level. The low of the daily level is the weekly peak here as well. Then you go to the daily, and there's a lot of candles in here. I kind of like that as my support level. And another thing I want to add as well. Now, the indicators that I'm adding are not super important. It's not going to be like, it's not the most important part of the system, but I've seen that it does increase the likelihood of a bounce, but not in a way that it's, making it much better. I honestly think that what helps me the most of increasing my win rate is going out on a run, meditating, reading a good book. Now that is something that increases my win rate of the system. The indicators that I'm adding might give, a 5% win rate or something like that. But then again, by not doing the, working on my trading psychology, I might do mental errors that's going to, have a cut off like 15% win rate of that month. It doesn't really matter. So for me, it's super important to keep technical analysis very simple, because everything else is just going to be so advanced that I want to make sure that only like 25% of my brain power is focused on TA, while 75% is focused on other things like what's actually important. But I'm going to show you two indicators that you could be adding to this to add confluence to your entry triggers. So first of all, it's the Fibonacci retracement tool. That's the first one, and the one I'm using. If I'm going to be using any indicators, that's the one I want to be using. But I've also found that I think I use the Fibonacci retracement tool more as a way of feeling good about the level that gets retested, because sometimes, if the low is down here, if the low is down here, I'm gonna enter this trade anyway. Even if the reload zone is down here, I'm gonna take this trade anyway. But it just looks good. It just looks good when price hits that reload zone, And then I can, show you guys like, look at that, hit the reload zone perfectly. Well, of course it did. It does that almost all the time, and is there edge in that? Yes, there's edge in that, but there's more edge, I would argue, in simplicity, because the more things you add to the chart, the more the more possibility of analysis paralysis. Because what if the reload zone is down here? Does that mean I'm not going to take the trade? Of course not. It's still a valid level, okay? But what I do is I put the fib from the low of the move to the high of the move, and I want to see the reload zone being in confluence with the retest. And then you can see the next candle. This is where we are trading right now. It's currently perfectly testing the 0.618. So this is a trade that I'm currently monitoring and trade that I'm looking to take if I do get confirmation. And the perfect type of confirmation would be for price to, in this case, move a little bit lower, maybe to the middle of this zone, and then start forming bullish market structure like that. And that would be, of course, on the 4-hour. So we have now a strong move to the downside. But if we see price starts moving like this, that would be the absolute perfect trade for me. I would then enter right there. And if I can, I would then have my stop loss below the reload zone, because that's where we had the horizontal level as well. And then I will look at the FTA. Where is the FTA? You know what? I think I'm just going to take that wick right there of that level, or even, because I'm trying to be not as greedy, and I'm trying to be, the opposite of greedy, So these candle closes and right here, that would still give me a 0.87 R win rate. And when looking at trades that are 1 R, I know that I have around 62% win rate. And if I have half an hour, I have about 72% win rate. So anything between half an hour and 1 R is going to be profitable. Now, of course, there's other ways of trading this. You could be trading this as a swing trading system where you're looking for, a few big winners and many losers. And in that case, I will be looking at the last local high, which is up here, because then you would have a few trades that are 3, 4, or even 5 R, but you can have a low win rate. You're going to have closer to somewhere between 30 and 40% win rate. And for me, I've realized that since I switched to having a lower risk to reward, I've realized that I'm not a good loser in trading. I function much better from the perspective of being a high win rate trader, maybe even making less money, but higher win rate. I feel like that is where I'm supposed to be. And that's where I actually want to take profit here and not at the highs, because I'm then going to have many small winners, a few losers, but many small winners. Now, like I said, I wanted to show you a trade example that I've actually been taking on ADCAD here. And yeah, that's going to be this one right here. So we can look at that one. What you saw here on the daily, let's first take a look at the daily. Now, this is, I'm going to be honest with you guys, this is not a perfect trade. This is not a perfect trade, but it still shows, it somewhat makes sense. If you go to the line chart here on the daily, there's two levels. There's first going to be this initial level, and then there's this high time frame level below right here. And if I have a very good confirmation at this first level, then yes, I can take the trade. And good confirmation would be multiple candles on a 4-hour telling me that this is support. Okay, then I can take that trade, even though that the level is not perfect, because this level is stronger, it's untested. I feel like it's going to be acting as a magnet. But I have an alert here. Okay, so let's say I have an alert right here. Not sure why there's two. Let's move that to the side. That one. We have price coming down. I have an alert right above the 0.618, which is also at the horizontal level. So I can remove that one just to show you that it's not really needed. So we have price coming down. I get my alert is triggering right here. And we have that's decent confirmation to me, because that is sort of a rounded bottom formation, and you now have three bullish candles on the 4 hour. You have one pin bar, and then this engulfing candle, not really engulfing, but the bullish candle is closing above that level right there. And in this case, what I did was I put my entry orders down here, because I looked at the breakout here, and I looked at this and I said, this level, I think this level is going to be retested right there, because it kind of broke above, and now I'm looking at a low time frame break and retest. So I got my orders right here, and my stop loss is wide, again, very wide stop loss right here, all the way down here, giving the trade enough room for error, and also giving me time to actually exit the trade if I get something like this. So let's see, next candle, it fills me, and then it hits TP in the next candle right there. Let's look at how this looks on the lower time frames, because sometimes it's a good it's a good thing to go into the lower time frames to actually see how price is reacting to the levels, because there is, of course, some edge in understanding what's happening on the lower time frames without trading the lower time frames, because inside a 4 hour candle is a universe of 1 hour trends. And you can see here on the 15-minute is the structure that we saw on the 4 hour that looked really good is also a W structure on the 50-minute, and you have the break, and you get the retest of a significant level right here. And this is why I say that price action is fractal. You could have found this trade by looking at the daily and 4 hour as your higher time frames, and then executing on the 15-minute. Now, you need to have much higher, you need to be looking at the screens much more actively if you're going to be trading this way, but it can be highly profitable as well. So let's say that you're looking at this level from a daily and 4 hour perspective, and you look at that level as your invalidation of the breakout move, because that's where the move happened. You can also use that low as well, of course, that one right there. So you have two options: either put in orders right here with stops below that one, and then TP up here. That would be a 1.46R trade, and you would have been filled right there. You can also look at this as the confirmation and enter on that candle close with that as your stop loss, and then above here would have pretty much the same risk reward on these trades, but they you would probably get stopped out on that one. Actually, it's better to have the wider one, but the result is pretty much the same. Now on this trade right here, you would have gotten about 1.3, but then you look at my original setup, and you would see that my stop loss was all the way, TP here and all the way down here. So my risk to reward on this one is below 1, so it's a negative risk to reward. But I take those negative risk to reward, because the chance of having that stop loss getting hit by a wick and then just giving me a small move is quite high. So it's much better to, for me at least, from my perspective of trading. I'm gonna look at one more example, and then we're gonna go through some questions. Take a look at NCD CAD as well. Let's see. I think this. See which one this was. That one. I want to make sure that I'm actually only showing you trades that are good trades. So it's not like, because sometimes obviously I'm taking trades that are not trades that I'm supposed to be taking. This might be one of those, but we'll see.
We
We can see
the,
here that we do.
No, go ahead.
No, I think actually this is one of those trades where I think this is one of those trades where it's not really perfectly aligned with my system. But what I saw on NCD CAD here was that we had obviously an initial reaction to this level. We broke above, and what happened here was we broke below this level. And when we kind of went above and then below again, it means that we lost this level. And on the next retest of this level is where we probably gonna get, use this as resistance, because I was looking at price coming down here. I'm going to just show you what I looked at here and what was my confirmation of this trade. Let's see. I think it was that candle right there, or the next one. I think it was that one right there. So we're testing this level. Now, again, this is obviously not a break and retest. You can see that it's, that second retest, but the entry confirmation here is similar. So what I did here was I took this trade. I think that was my stop loss. And then I looked at a move just to these lows here for a 0.72 R trade. So you can see the overall idea here is that I'm looking for a move down to that level. It's a daily level. We've used the level as support and resistance. Now we're clearly using this level as resistance, and we have a clear, I believe that might have been my TP actually. So around 0.6 R trade, and then we came down and we hit that level right there. And then of course, looking at the bigger picture here, we are now currently trading inside the area of interest right here. So what we have now is this is a daily and weekly level. So I want to see NCD CAD come down lower. I'm going to be removing this right here because it's not really needed now. And you can see I can also remove the reload zone because it's not needed as well. So I want to see a move down into this area, and that's where I want to see some type of confirmation that it's support, and then I'm ready to take this trade higher. So very, very simple. I put this level on this Sunday and put the levels on, put alerts at the level, and then when this level is being hit, I go into the 4 hour and I start looking for that confirmation of a bounce. And again, my weekend trade planning is one of the most important thing that I do. I believe that's where the edge come from, because you see that the technical system is very, very simple. It's almost stupid simple, but the edge comes in preparation and planning and making sure that we only take the best trades. All right, so Victor, I'm thinking that we want to take a 10-minute break, and when we get back, I'm going to answer all the questions and also go through my process for scanning the markets on the weekend. How does that sound?
Sounds like a great idea, man. Yes.
All right. Let's see you guys in 10 minutes.
All right.
All right, we are back.
Yes, we are.
We're seeing some strong moves today. I got some alerts popping off, and yeah, I mean, I'm looking at this ADJPY trade that I was in. We're continuing lower here. I'm also seeing the New Zealand dollar is moving. We have this moving closer to my level. We also had a gap down on NZD CAD after the weekend, as you can see right here. AUD CAD, we're having a strong move to the downside here on AUD CAD as well. So we are seeing some pretty strong moves here today. And I'm just going through my list here to make sure that I'm not missing out on any opportunities, and see if there's any trades that are in an interesting area. So I might, let me just go through this quickly, and then we'll see if I can find anything that I can enter on this 4-hour candle. No. Okay. So my way of scanning the markets. Okay.
But before,
Because I said that
before we go to the following section of your strategy or of your workflow, I think it's worth mentioning that the EU has now turned back to bearish order flow. We just closed on the H4 a outside bar, right? We had the move from a couple of last couple of sessions, primarily bearish. I don't see you. Let me see on the H4. Yeah, are you on the H4? Yes, you are. Yeah, it is an outside bar, as you can see. So we are back into that order flow we were before. So it's more likely now. It doesn't seem, if price were going to be moving up from this area, it shouldn't be forming bearish outside bars. The fact that it just formed it 10 minutes ago, 12 minutes ago, is a sign that, you know, the bears are getting back, the sellers are getting back to the market, and we're most likely, the easier way to go from this point on is to keep on breaking and going much lower, continuing that impulsive move that formed that daily daily engulfing that we mentioned at the beginning of the session. So that's significant. I got stopped out. I had 3 signals, so for today I'm -3, and of course my my trades that were left open from Friday, which were also 3, were also stopped out, which is okay, because the idea is, at least that was the entry logic, that we could have some kind of retracement before. I was expecting it to be bearish again, but perhaps later today, maybe tomorrow. But it seems like it's not going to do that because of that H4 closure. That's something. So now it doesn't make sense. Or let me put it this way: the chances of it retracing now has become slimmer, because you have to now fight against a fresh outside bar, that is clearly trying to keep on going lower. So it is possible that market can still reverse and make that retracement, but it's much less likely to happen right now. Just wanted to update for those following EU price action. Go ahead, Jonatan.
Yeah. So actually, let's see if we have any questions. Let's see. I'm gonna go. I have a few starred ones here, so I'm gonna see if I can go through them here. How much risk is taking in each trade? So it doesn't matter how much I'm risking. There's certain things you have to do to determine your own level of risk, because the level of risk that you're using in your trading shouldn't be based on the risk I'm using for my trading, because we're all trading differently. Now, one way that is one really good way of determining the risk factor that you should be using is looking at your, like Victor always talks about, is so before I met Victor, I used to look at my max trade as the and if there's nothing
Losing
wrong with
streak.
that, it's just Victor's way of looking at it is much more, much better. So I looked at the max, the biggest losing streak. So like, what's the max number of losers in a row, and then I, um, made sure that I can have double that before I lose the account. But looking at the way Victor does it, I can have, we look at the average drawdown. So what the max drawdown? So what's the max drawdown of your system? What's the max drawdown in backtesting and live trading, and then base your trades, your risk on that. And that's going to be different for everyone. And that's why your risk will not be the same as my risk. But I would say that on my biggest account, I'm risking 0.5% per trade. And then I have other accounts where I'm risking 1%. And on my personal account, I'm risking 2% per trade. So it's a bit different, because obviously on my personal account, I'm not going to, I'm not going to lose the account if I have a 6% drawdown. And I'm okay with having a 6% drawdown on the account. So for my personal account, I'm risking 2% per trade. And then on, let's say for example, the boot camp challenge, I'm risking 1% per trade. And then I have another account that I'm risking 0.5%, and another one where I'm risking 0.25%. So it's different. It's a bit different. And I'd say it's personal. Wouldn't you agree, Victor?
Yes, no, for sure. I think that's a common question. People want to, risking the same, because that may make them think that they are doing the right thing. Because if Jonatan is risking whatever 0.5%, 1%, then I should be doing that too. But it's not about it needs to be based on the data, because your strategy is not the same as someone else's. And what you mentioned is that depending on the importance or the value the account has for you, right? And that can be in terms of how many times you have invested in the account. Let's say if you're on a bootcamp on a phase 3, it has more value to you than phase 1. So already you can see that the more the value the account has to you, the less should you risk. And that can be a value in time, but it can also be a value in how much did it cost you to, buy that evaluation account. Is that amount a big number to you? And that can be different for everyone. then you should be risking less, because the more value it has to you, the less you want to be risking of it, right? So those two ideas are I think what should guide you to decide what the risk setting should be for each trade, right? So the data should tell you the max drawdown, I think, and two, how important that account is to you.
Yeah, definitely. So risk is something quite personal, and I can tell you, I can tell you how much I'm risking, and I can recommend, not recommend, but I obviously not financial advice, but there's certain levels when it comes to risk. There's certain rule of thumbs, I would say, and I'd say that don't risk in 1% more than 1% per trade. I think that is, like, to me, that's like a golden rule. If we put all types of trading into one basket and then we had to choose one risk, and I would say no more than 1% per trade. That's generally a good rule of thumb. Now, of course, if you have a low win rate, you need to risk much lower, much less. But let's
there's another thing also on risk that we don't talk about. That is, well, I mentioned that this before. The bigger the risk is, the less the more difficult you make yourself, because the bigger the risk, the more the deeper the drawdown will be. And when you're trading in drawdown, that's when you most likely are to, revenge trading, over trading, all those bad things that will make you lose the account. And when do they happen? Most likely, right? They happen when you're in drawdown, because you're under pressure. So what you don't want to do is put yourself from the beginning by risking a lot, because drawdown is part of trading, right? So you're choosing right away to have more drawdown than otherwise, and by making that choice, you already put yourself in a less favorable position, and that's something you do not want to be in. So you don't want to be under pressure. You don't want to be in a deep drawdown. You want to avoid that as possible. So your risk setting should reflect that as well. You don't want to be in a place where you're 1% away from your max loss limit on an account. That's a horrible place to be in, and you're probably not going to perform well. You're probably gonna, most likely than not, lose the account, and that's something you should be aware of when you're thinking about the risk, right? Risking less means perhaps winning less, but much more importantly, it's losing the account less likely. And that should have priority on winning more, which is, of course, good, but not if it comes at the price of losing the account more often.
Well said. Let's okay, so I'm going to show you guys the structure I have here to scan the markets. So it's might look complicated, but I will go through it and I will show you exactly how I have it set up. So in TradingView, you can have a watch list, and then inside that watch list, you can have sections. So the way you add a section is you right click on something inside the watch list, and then you click add section, and then you can rename this section to whatever. And I have a few sections here. So first is I have a section called to scanned, and that's basically, at this point, it's everything in the watch list is in the section called to scan. That's what I'm going to scan. And then I have one called this up. The one at the top is called open trades / orders. Okay, so if I have a pair that I have active orders in, and that means entry confirmation has already happened, and I put in limit buy or sell orders, or I'm in a trade, and then that pair goes up here. The reason why I have it like that is because it's easy for me to just quickly check which of the open trades, which of the pairs do I have open trades on, and then also I leave them there rest of the week, so that at the end of the week, when I do my weekly trade journal review, I know which ones I'm going to look at, and that's only going to be those that I've actually traded. So what I do here is every weekend, and then I also have at the bottom, I have one section called extra, and here I have the dollar currency index as an example. And then I might have, because I'm not actively trading the Nasdaq or the S&P 500, but I like looking at them from time to time. I have them down here at the very bottom when it says extra, just to, for sometimes I want to look at them. So what I do is I scan the markets, and if I find something that is interesting, I move them to the list that says scanned interesting. So AUDJPY is interesting. Okay. So I move that to interesting. NCD CAD is interesting. But I would also say that this is actually not only interesting, this is a priority, because it's not only is it interesting, but it's about to hit a area of interest. And maybe tomorrow or later today, I will have to look at this from a 4-hour perspective, because it's about to give me a confirmation. And that's why I moved this up to the section called scanned priority. So I go to AUD CAD. This is a scanned priority. GBP NCD. This is just interesting. CAD JPY, interesting. GBP CHF. This is a priority because it's in an area of interest. GBP USD, interesting. And then I do this, and then now we have AUD USD. This is, I would argue that this is an uptrend, but it's not, but it's below support. This will not give me a long setup until, probably a couple of days. This is not very interesting. So I move this down to the section called scanned no interest. And I'm adding some alerts at levels where I might be interested in this one, but I'm not going to be looking at this one. This isn't really telling me anything of importance. And I continued like this. And this is the watch list that I'm using now. And you can see that I have open trades. This was the AUD/JPY trade, and then scan priority. These are the ones that I'm looking at, daily to see if I can find, wait for confirmation. As you can see here, we have NCD CAD almost in the area of interest, AD CAD in the area of interest. GBP NCD is moving higher, which means it's not really that interesting anymore. So I move it down here. CAD JPY, not very interesting anymore, but it can still give me a trade setup, but it's not a priority. So I'm moving that down. GBP CHF, that's a priority. GBP USD. Actually, I'm going to keep this on a priority because it's close to hitting that level. AD USD, not interesting anymore. So I'm moving that all the way down to the scanned no interest. And then we're going to continue with the priority list. This is also just interesting. USD JPY. This is a priority. GBP JPY. This is also a priority because it's very close to that level. NCD USD is also a priority. So now that I've done the first scan of that priority list, I'm going to do once again to make sure that I only have the very, very most interesting. NCD CAD priority, AD CAD priority, GBP CHF priority, GBP USD. I'm going to move it down. USD JPY good. GBP JPY, I'm going to move it down. NCD USD. Okay, so now I have 1, 2, 3, 4, 5 pairs that are in the area of interest. These are the only ones I'm going to be focusing on. So you can see now that I've gone from, basically, I'm trading over 40 different pairs. But that doesn't mean I'm looking at 40 different pairs all the time. This week, I'm only going to be focusing on 5 pairs. The rest of the pairs, I have alerts set. But look at NCD CAD. It's very close to coming down to the level. AUD CAD is already in the area of interest here. GBP CHF is at this support level. So looking at the daily here on GBP CHF, we can remove these levels right here, and we can extend this to the left. We can make it a little bit bigger, make it a little smaller to the upside. That's the support area. Now this is actually, could argue the second retest. But what if we look at the 4-hour, and what if we get this? So maybe, could do something like this. What if we get that, or just a higher low? And this is on the 4-hour. And while this is printing on the 4-hour, we have a bullish engulfing on the daily. So what if this daily candle is closing up here, and on the 4-hour it looks like this, or yeah, something like that, right? In that case, I might look at this and saying daily bullish engulfing, 4-hour holding as support. I'm going to be entering here, stops below the level, and I'm going to TP at that FTA, which is that wick right there. And you might say, well, that looks like a horrible trade. That looks like very bad risk to reward, but it's actually 0.7. So it's actually higher than some of the trades I'm taking, and it's a very wide stop loss. It's all the way below the level. It's all below a daily level. And I'm only looking for a very, very small move to hit that level right there. Very small move. So that's the plan on GBP CHF. And again, I can go through, this interesting list right here, the scanned interesting. I can go through this and I can find quite a few trades to enter right now. Most likely, I'll find a few trades that I can enter right now. So this is on the daily. We can look at JPY here, for example, and let's see on the 4-hour. Like GBP CAD, this looks quite strong. I might just, if I'm not too careful, I could just look at this and say, well, it really looks like price wants to continue higher. I might just take the trade and put stop loss here, for a 0.6R trade. It's most likely going to continue higher. But then you go on to the daily and you say, well, you know what? The perfect level is below. My edge is looking at that type of structure, but at a high time frame level. So if I want to, I can take a trade right now. There's many opportunities out there to take a trade right now. But my edge comes from having a very simplistic approach to technical analysis and being very, very patient in waiting for the right type of setups. Now, the system that I've showed you here today is, again, very simple. There's not a lot of indicators. There's not a lot of moving averages or anything like that. Just pure price action and horizontal levels. But it's also very easy to trade this and making it better and easier to understand by adding indicators like, for example, the stochastics RSI, the Fibonacci retracement tool, or moving averages. So we can add the 20 and 50 EMA here, for example, on the daily. And you see here that there's definitely some edge in going long here when price hits either the 20 EMA or maybe the area between the 20 and the 50. And then you can add the fibs, and you could say, well, what if we only take trades where you hit the 50% fib? Well, now you see that the 50% fib is in really good confluence with that weekly and daily level and the 20 EMA. So what if the next daily candle comes down to the 50, and then you add the stochastics RSI as well, and you see that, well, every major bottom in this trend has been when there is a stochastics RSI bull cross. Okay, so you have stochastics RSI bull cross right here, daily bullish engulfing candle. You have stochastics RSI bull cross right here. And you have the next one happens in this area where you also have a strong bullish reaction here. The next one happens here where you also have a daily bullish engulfing candle. And then the next one happens here with a daily bullish engulfing candle right here. It's a good combination. It's a stochastics RSI with a bullish engulfing candle. You can see that basically, I would say that 1, 2, 3, 4, 5 times you have entry trigger, and only one of them would have been losers. So the win rate just out of this section would have been 75%. But now again, it's on the daily, and I'm looking at all the way from December 2023. But it's the same on the lower time frames as well. The combination with stochastics RSI with the bullish engulfing candle is very, very strong on the 4-hour as well, as you can easily just test. You can just test it. We can look at where's the major bottoms on the on price action, and then you look at where was stochastics when that happened. So you can see, for example, the bull cross and the stochastics was confirmed here. Black. Let's see if we can make that white. So that was when you had a confirmed bull cross on the stochastics RSI. You also have a bullish reaction right here. Let's add the fibs here because I'm pretty sure that that's a good fib as well. And that's also, of course, going to be the that hit the 50% fib. So when you combine all of this with horizontal levels, you'll see that this would have not been a trade because it did not hit the horizontal level. But if price comes down here and all of this aligns, it's quite a good confluence. You can add the EMAs here as well. Now you see here, and in this example right here, we did not have a horizontal level, at least not this one, but we did have one section here, you know. But what we had was 50% fib, 20 EMA on the 4-hour, bullish engulfing candle, and a stochastic RSI bull cross. So this is the way I'm trading if I'm trading with indicators. But I've seen that these indicators, just like we always say that leverage is a double-edged sword, that's just the same thing with indicators, because indicators can help you a lot and can tell you which entry trigger is better, looking at statistical data with, you know, the confluence and everything. But it can also make you miss, you know, you're looking at the same thing over and over again, and it's easy to miss details that you might miss when you're only focused on specific indicators. So what I like to do is I like to just keep it very simple. Most of the time, you know, just remove the indicators and just look at horizontal levels and pure price action, and use price action instead of those indicators.
That's
Okay.
that's a great point. Indicators can help, but they are, as the viewer just mentioned, they're lagging to begin with. But they can obscure your view if you're relying too heavy on indicators and you're missing out on the actual price action. You should always prioritize the price action above any indicator, because the indicator is actually is a derivative of price, right? It's based on price. Price is more important. It's only there to help us visualize what price is already telling us, but we are not able to read them because of personal preferences, or we're not there in terms of experience yet. But if you follow price action, there is, the more you know about and the more you can read price action, the less the necessity for indicators. So they're good, but let's not put too much emphasis on them. They're not they're not gonna make you profitable.
Yeah. With that said, I think I covered I think I covered most of the things that I wanted to show you guys today. And I know, you know, it's not super interesting to I mean, I know that most of you come here to show, you know, to see actual live trading, and obviously that's what we're going to be doing in many of these live trading shows as well. But I also think it's important to realize that while it's very interesting to get into trade and look at people trading, you know, and looking at the P&L go up and down, it's entertaining, it's fun to watch. But I think what's important to remember as a new trader is that most of the time, and I would say almost 90% of the time, when you see a trade setup, it's better to wait for, you know, the perfect one that ticks all the boxes. So most new traders, you know, the average retail trader is not profitable. And I think one of the reasons why they're not profitable is because they're more interested in actual being in a position than taking the very best trades. You know, it's more fun to be trading than waiting for the right trade.
There's also something that I think today we can say about today is, as you said, it is fun and educational to see others, trade live, put on trades, and either take those DPs or stop loss or manage their trades. But I think there's much more value to watching someone trade if you have a deeper understanding of the process that person goes through trading, right? If you just see the trades, that is okay. You can learn a couple of things and perhaps many things from that. But if you understand the reasons to begin with, how that person trades, right? What is the process that person uh, uh, uses to have his or her signal? Um, but in not only that process is important, but if you understand that person, how that person behaves within their strategy, you're more able to extract more value from watching that person live, right? Because only watching
Yeah.
live and you don't understand the strategies, the considerations, why he's doing this, or perhaps in this occasion not doing what the normal the normal strategy is, right? There's a little adaptation sometimes, so there's a reason for that. There's a reason why Jonatan or myself or any other trader may deviate from the picture perfect setup, right? Because we may adjust a little bit, but if you don't know the actual original strategy or thought behind it, you're likely not you're going to miss that nuance why we did this time a little bit different. And that comes with experience, of course. But it's these things, talking about how the process is, even though it's less entertaining perhaps because you don't see a live trade. It helps you in the following sessions where you do see us trade live, and you can gain more from them. I think today is very valuable nonetheless.
Yeah, absolutely. I think and I also think I think some of these trades will get activated um, this week, because I do see this as a very impulsive move on a Monday, and when we get moves like this on the Monday, I don't know. It feels like it should bounce here. That's I think at that well. I can't say it should bounce, but if it bounces, I think it's highly. I'm definitely going to enter a trade on this one. And actually, most of these look like we're getting a typical Monday move. And what I mean by Monday move is a lot of times the Monday moves, you will not see a lot of follow through throughout the week. So I see that, for example, when I'm entering on a Monday, it has lower win rate than compared to other weekdays, because a lot of times, let's say for example, you're trading this move the downside. You're seeing bearish price action coming in, and ignore the fact that it's at support here, but we're getting a move up here, and this is on the daily, and you might be finding a short on the 4 hour, but this move on the monthly gets a lot of times retraced. You'll have a pullback of this whole Monday move on Tuesday. So I think we have a decent chance of getting in on a trade here tomorrow, unless it bounces today. And I would want my best type of trades are when there's, like, let's say there's a daily close here, and then or maybe even a day, have wick down here, daily close here, and then you have Tuesday daily candle as opening inside this area, and you're not just having a massive wick and the daily candle, the Monday daily candle is closing up here, because then it would be difficult for me to get into a trade. I need this daily candle to close around this area that we're trading in now, because otherwise I'll miss out on the move most likely. But we do have a few interesting movers here. USD JPY is actually showing us something very interesting right here. We are potentially seeing a higher low here inside, not only inside the reload zone, but also at a fairly interesting area. If we go to the weekly and we add the weekly, we put the line chart on here. If you, I'm looking at, first of all, I'm looking at this move. We can go back to daily. I'm looking at this move as a deviation. Okay, this is probably like NFP or something. CPI or NFP. We can go back, or something with the Bank of Japan, but we can go back and we can look at that and see what actually happened here. So that was, we had Bank of Japan interest rate decision, and we also had core PCE, and then here we had the Fed interest rate decision. Yeah, so a lot of things happening around that time. So I'm looking at this as a deviation. It's still, so I'm not taking that type of price action into consideration much. But we can add, based on the daily or the weekly line chart, we can add a support level right here, and then look at the candles. It kind of makes sense. Then we go to the daily. We could adjust this level slightly with something like that. And what I see here is price is obviously respecting this level here as support. And then we have resistance. So we have a downtrend forming like this. And now we're starting to see potentially a higher low forming. So the confirmation of a long here would be a break and retest of this level right here. And we would then have an uptrend on the 4-hour. So if we have, for example, a 4-hour bullish engulfing candle closing above this level, I would enter here, and then it could have stops even either below that one or all the way down here. And then my TP would be based on the FTA, which would probably be here. I would probably have that stop loss a little bit higher, so I would be looking at a 0.7R trade or something like that. But that's a trade that I see can potentially give me a trade setup this week. And last week I entered 3 trades, and I think 3 trades for me, that's not a lot of trades in a week, but it's actually quite a good number. So with three trades, I'm looking at probably is 1R profit. So last week my profit was 1R, but I'm risking on that account 1%. So that's 1% in a week, and some weeks will have a negative R, of course, but some weeks will have multiple R's, which means multiple percentages of profits each week. So while there's a few number of trades, it's I'm risking way more than, for example, you or Victor.
Yeah, and you have to balance those things out. You have to because you can be depending on your because now you're having a high win rate, you can allow yourself to risk more. I wouldn't be able to risk as much in percentage terms as much as you do, because I have a tighter stop loss. I take more trades. My win rate isn't that high. So to me, the chances of having a losing streak is much larger than yours. And I need to be able to withstand a losing streaks much longer. And the only way to do it is to lower risk. So, but you have to keep them in balance. The actual, just the metric or just the information, how much you risk on the trade is really doesn't tell you anything if you don't have the rest of the statistics you need to have, the max drawdown, the how many trades you take in a day, in a week, because otherwise it doesn't really tell you much. And that's something we need to consider when we decide what kind of risk we're taking or putting on each trade.
Yeah, definitely. All right, so guys, I think I've covered everything that I wanted to cover with my trading system. I think now you guys can use this live stream to go back and look at the way I'm trading and the system I'm using and the method or the methods that I'm using in my trading. So if you're watching a live stream and not really sure what I'm talking about or the way I'm trading, this can serve as a great watching the replay can serve as a great reminder of the way I'm trading. Victor, unless there's anything you want to cover, I don't really see much that I want to be looking at today. Maybe you have something you want to cover before we start wrapping up the live stream.
Sure, I can show the chart on EU, and we can go through what I'm looking at and what I'm thinking as it is happening. Let's I'll put on my screen and make sure that my reminders or my alerts don't get through the stream. That's something that I don't want to happen, but let's see. That is the, yeah. All right, so this is EU, and of course we can, without going into a full-blown analysis, which we do on Discord, top down, going in with details. We are currently in a weekly order block, which was not able to hold price as tightly into its realm, and we now, but we also touch a weekly structure above us, right? And when that happens, I tend to look at this one because we have another structure that seems to be the one that is turning price, right? That's what we want to be seeing. So this is the order block that is relevant to me, and the fact that we left from a weekly order block, right? We did interact with this order block, but it was another weekly order block that left this wick. That's important to me. That's what is relevant for me to look for. Okay, so we did we followed the script, or price followed the script, right? It left a weekly order block and went to another weekly, even though it's not the first one, but it went to another weekly. So it makes sense that with this wick that perhaps we could see some retracement. We go to the daily, and we have a nice bearish order block that was formed. Price is currently retesting it, so it makes a lot of sense for price to either go a little deeper, right? Which was my idea at the beginning of the day. But it can still happen, but intraday it had already turned around by breaking bullish structures. So the likely place that it's going to go is after it touches these order block, as retesting it. It is supposed to go much lower, right? That's the easier path for price. And if we go to the lower time frames, what do we see? We did have a bullish order block, which was formed on Friday, right? Which was the reason why actually two, not one, which was the reason why I was long at the beginning of the day. And I had some buy signals. However, as I mentioned, we should not be forming bearish structures if we're going to be going up, right? That doesn't make sense, right? If you're going to go up, it should be forming bullish structure, not bearish structures. And certainly no outside bars, which are even stronger bearish signs of what price wants to do. So the fact that it also broke some H2 and H1 order blocks, bullish ones, and it formed this H4 order block. To me, that's the sign that price wants to continue its path that it started, that actually formed the daily order block, right? This daily structure. So we're probably going to be, maybe today, maybe tomorrow, we're probably going to be looking for price going lower, because that's the shift in the market that the price action is telling us by forming those bearish structures. That is what I'm looking for. But the price, nothing is written on stones. So what I just mentioned, that the market flipped, right? It formed a bearish structure, and that doesn't fit with the bullish structure we have below. It can still turn back around and close as a bullish engulfing, right? Market does this a lot of times, especially during London. We're not during London's open session, but London is very known for that, where it switches sides more than once within the session, within a couple of hours, right? Trapping people on both sides. That can still happen, and that's what I wanted to share. If when I started to say this, price was very close at closing as an engulfing, and if that would happen, the H4 order block is still valid. If it would close as an engulfing on the H1, that could be the beginning of price switching back again bullish, right? So it's a little tricky, but I was looking into that, but it did not happen as I was started talking. and instead of that, price just pushed lower, which this candle is going to be closing in 7 minutes, and so far it doesn't look to be be an engulfing bar. That's only one scenario, and that's how I try to that's how I see the opportunities coming in, where I anticipate that if this happens, what would price action be telling us? And in this case, it didn't happen, so there's nothing to do. But if it would close as an engulfing on the H1, that would be a reason for me to look for opportunities going long. I know even though market shifted to the downside, it can switch back again multiple times during the day. So, but it's not doesn't seem to be wanting to do that, and it's probably just going to continue its path down, which is its path to the downside, right? So that's the only thing I wanted to share that I think is relevant, right? It is respecting, if we even go to the lower time frame, it is respecting it is the bearish order flow. It's not an entry. This is just a regular order block. It's respecting that bearish order flow, which is that I mentioned before, right? It's going for that continuation to the downsides, and looks to be going to be breaking that H4 order block in the coming hours, probably, if it doesn't change again to the other side. That's it for me.
All right, awesome. We should perhaps talk a little bit about order blocks on Wednesday. We do have, let's see, when is that? Tomorrow we have Anastasia coming up, and she's going to talk about, in the first part of the live stream tomorrow, she's going to talk about some more details of her trading strategy. We got a sneak peek, if you will, last time she were on. Now she's going to talk about more details of and perhaps show more trade examples. That's going to be very interesting. Then on Wednesday we're going to do some live trading. Maybe at that point Victor could talk about order blocks as well. Show us how he's trading them.
Yes, for sure.
All right, good stuff, guys. Thanks for watching today, and hopefully you'll learn a lot from this live stream here today. If you're watching the replay, make sure that you come on the live show and ask questions. I'm more than happy to answer all your questions based on the system in another live stream as well. All right, guys, take care, and we will see you all tomorrow.
Don't forget to hit the like button. Bye-bye.
Yes.
See you tomorrow.
Hit the like and subscribe. Thank you very much. Take care.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content.